Okay, this is just a test run. I'm creating a little channel here to document my trading. So I'm going to reduce this and just kind of keep a running dialogue here. For the moment, you're just going to watch what I do. We've got 0 prints here to become. Now we haven't cleared that out. Oh, well, I'm chasing this a bit. Let me see. So we cleared up these earlier 0 prints. This is pre-market trading. I'm in the micros. It is a take profit trader eval account. I'm experimenting a bit on whether or not I want to do a live YouTube channel. What I wanted to do, let's see if it was successful in this. This account is a, okay, good. Apex eval account for $250,000. We have unfinished business up here, so the likelihood of us coming back up here at some point in time is very, very high, almost 100%. That means there were traders that had not exhausted buyers and sellers at just over 6,000, big fat round number. So probably sometime soon we'll come back up here. Maybe after the open. Statistically, we will break at least one side early in the regular trading hours. My first trade of the morning, we were up here in this node, and I took a short, even though we had UB up here. We had left 0 prints where we had moved aggressively up. So again, statistically, it was very high likelihood that we would come back because the 0 prints were even on the overnight trading. So we did come back down and clear that up because we had the 0 prints here. These are 30-minute bars. These are 30-minute bars, and this is the ES. I'm trading the MES, but I watch the charts of the ES. It's the MES is a derivative of the ES, and where the ES goes, the MES follows. It's a newer instrument, so it's the tail. The ES is the dog, so the tail does not wag the dog. So, and if we look back overnight, we had a large node down here around 59.80, 182. That could act as a magnet. It could also act as a, quote, floor. That might be an area that we come back to. This is just an area where there was a large volume of trades going off, where we found agreement in price for a period of time. And if we look a little bit further at this areas, you can see over here, this node was where the majority of trades took place overnight. Then we have this space where we move through quickly, and we've created a small node above. So we have kind of a double distribution, but obviously a much greater amount of trading going on down here. So typically price tends to go back to where it found value until it moves to another area and finds value there. It's just a matter of the I want to say larger traders, but a larger number of traders are comfortable there. So we've moved up with a little bit of an attempt to stay higher. So the overall bullish or the overall sentiment right now, I would say, is upward. So even if we come down into this area, we've left unfinished business at the top of this overnight range. And we have obviously made an attempt to come up here and stay up here. So coming down here to get back to a comfortable area makes sense. I would look for a long down in this area. Let's go explore what the lower end of the range. If we have UB down here, then we have a less great. Okay, so we don't. We have a nice long skinny tail here with no UB. So this is what we would call a price rejector, where we have at least 3 levels in the price where it is gradually finishing. The auction here has found a bottom, at least for now, and then moved directly back up. So unlikely, or if I had to bet on one end or the other, the fact that we have a much greater volume up here, we had finished auction at the bottom, and now we've left UB at the top with another small node. So you might say, well, why am I shorting it? Well, because right now the current price action is down, right? So I'm going to look for a target down here that would make sense. This is kind of a skinny area. So if we're going to move through here, we might move quickly, but I would get ahead of this area here to take my profit. So even if I just split that in half, let's say around 87, that, and you can see right here, there's a large number of orders, resting orders sitting here. And if we go, this is the NQ. If we go to the ES, that needs to be cleared. Let me do something real quick. I'm going to take this off. So this is Sierra chart that I use. It should have cleared old trades. That was from yesterday or Friday, this 12 tick loss, because I didn't trade the ES today at all. Overnight trading is riskier. That's why I size down. If you're trading a cash account, you would have fewer contracts to trade because the margin requirement is much higher. During regular trading hours, your micros, you can trade at $40 per contract. So if you have $1,000, you've got whatever that is. I can't do the math. It's too early in the morning and not enough coffee. $1,000, if you had $1,000 to trade overnight, divided by, or during regular trading hours. Okay, so you'd have 25 contracts, as opposed to overnight trading, which you have to have 1,250 to trade overnight. No. It's 350, I think. Depends on your broker, but so you'd maybe get 2 or 3, which you would never want to trade just 2 or 3 contracts. You have to have room to be able to add and take some off. that's nice about the evals and the funded accounts. They give you in the number of contracts as if you had a $50,000 or $100,000 account. The bad part is you have the trailing drawdown, which really is only 1,000 or 2,000 or 5,000. So you can get yourself in trouble easily, and that's their business model, to get you to trade too large of a size, get in over your skis, and make them money because you have to reset your account all the time or buy more evals. Anyway, overnight trading. Okay, so we were over here looking. What I'm looking for over here is any large orders, resting orders. So we don't have that in the ES. So there's no reason necessarily for it to go down other than right now this current candle now has UB, so it's likely we haven't gone far enough. We haven't finished the auction in this candle. So here we come. I think I probably, just got that out. So what I want to do here, I want to, it cleared itself. Oh, that's good for it. All right, so now we've had a finished auction. Now we don't. So not low enough, not low enough. I'm going to go ahead and take a trade here. So not low enough. We haven't gone too far. We did create a little node up here. So this is kind of exploratory, right? But we know that there's a node down here. I will probably say we might retrace to 50%. So I'm going to stick my order in right here. This is our liquidity. It's not a market maker, but there are liquidity traders above and below. This helps keep the MES in lockstep price-wise with the ES because these two instruments can't be too far apart. So I like adding to this trade to the downside. We've left UB here up in this area here. So I will add to it one contract here. And I'm going to mark where my first trade. So if I come back down, I know that I'm in profit right here. I think 59.75, 59.9, let's see, 59.9, 59.90, 75 should finish, should come down a little bit lower. So my first goal would be to take one off in profit so that I can reduce my risk. And then what I was saying about overnight trading, other than the margins are higher, so you have fewer contracts if you're trading in a cash account. It's also a thinner market, although this morning it looks like we have plenty of liquidity, but you can see how slow the action is. It's a Monday morning. Nothing exciting happened overnight. We didn't have, a great deal of activity. Our range 59.50 to 6,000, so about a 50-point range overnight. It's not unusually high or low. All right, so we're moving back up to this area where we came through and sold off kind of quickly. Those zero prints there tell us that we moved quickly through that area. So this might act as you could call it an area of resistance, or we just know that here's where the sellers stepped in and pushed it down. So I keep an eye on the NQ because it does drag the ES. If it moves strongly in one way or the other, many components of the NQ are also in the ES. So the NQ, if it goes very far, it by definition, it's going to drag both the YM and the ES in its direction. Okay, so now we are exceeding this node here. So, and we have UB on the same bar on both ends. So likelihood, we're going to come back up here and clean this out. So let's see if this holds. I'm not going to add to this trade here because then if we do come up here, I'm that much more off sides. But what I will do, if it continues to come up, I'm going to add probably 2 times the contract size, maybe even 3 times. So I can add 4 contracts up here if it comes up here and gives me a price rejector. And this is just kind of scalping and trading around a core position. So I'm establishing a core position short and just trying to get in a position where I can maybe catch a little bit of a runner. And generally speaking, when the activity is this quiet and this slow, I will, in micros, build up to about 1 full ES. So I'll get up to 10 contracts. If I've built 10 contracts and it's still going against me, I will just cut my losses because that's where I know I'm wrong. I start with 1 contract, I add 1 contract, then I usually double that, and then I double it again, or the equivalent of 1 ES. That way, I'm never more than, 3 or 4 ticks offside. And the nature of the ES, one of the things that you'll learn over time, getting to know your instrument that you're trading, the ES tends to do a dance, like a waltz, 1, 2, 3, 1, 2, 3, 1, 2, 3. It moves, ebbs and flows 3 to 4 ticks. So unless it's got high momentum for a reason, for a short period of time, it pushes in one direction and it moves. For instance, if we were to take if there were a news event or a larger time frame trader were to sell 1,000 contracts right here, that would push us down, and then we'd ebb and flow again down there. So as long as this is kind of going 1, 2, 3 ticks up, 1, 2 down, 1, 2 up, 1, 2, 3, 4 down, I'm comfortable staying in this position and letting it work itself out. Know that as long as you are in a trade, you have risk, right? Because we don't know who else is trading. So I have governors, you could call it, set. This is an eval. So in the rhythmic dashboard, I will go in when I get a new eval or a new funded account, and I will make sure 2 things. I have an automatic liquidate at 1640. That Eastern time, so that is 3:30 p.m. Central when the markets close. It's 3:40. So that way I don't, no matter what, I don't have accidental orders on before the close, because that will kick my eval account, fail me in most of their rules. And then I also set a reasonable catastrophic loss, so that if we have a rogue wave, something wild happen and it just goes against me because I'm in a trade because I looked away from my computer or whatever, I wasn't paying attention to news events, it will stop me out before it kills me. And that's usually what I like to set, is either just a flat loss limit. Maybe it's $500, maybe it's $1,000, depending on the size of the account. Or what I've begun doing is a trailing loss, so that let's say I'm up $1,000 and I don't want to let it go all the way into loss territory if we have a sudden move against me. I want to protect as much of my profits as I can. So I might have a trailing $500 loss. So if I'm up 1,000 and then it pulls back 650, I get stopped out with a $500 profit intact. Now I still have my trailing drawdowns from the eval, so I have to go and look, how much damage I did to myself there and bear that in mind. But I found that to be the best way to preserve my evals and my funded accounts from failure. And then I will also set a take profit, because some of these evals have consistency rules, and you can only make so much in one trading day, or else you have to, even if you've passed it, like you can't pass it in one day, most of them. You've got to trade the 5 days or the 7 days, whatever the requirement is. Okay, so we're going to go up a bit. I'm going to keep an eye on this. 59.96. So I'm going to say if it comes to 59.96, I want to, this is 2 contracts that I'm in right now. If I add 4, we split the baby. And so it'll bring my average price up to about here, which would be good because it would be above this node. Statistically speaking, if we come up here, make some a price rejector, we're likely to come back to the 50% area here. And but it seems like we're going to move back into this node. We may ebb and flow here for a long time. So anyway, what I was saying about the funded and eval accounts, I set my, let's see which one, this is the Apex. So this one is a $250,000 account. I think I'm up 8,500 right now. The target to pass it is 15,000. So, and I typically trade the NQ minis in this account, but since I'm doing some practice videos here, I'm trying to see, dipping my toe in the water here to see if having a YouTube channel is something I want to do. It's hard to trade and talk at the same time because you've got to, multitasking is never good. You're not good at either thing. So there'll be times when I'm just quiet and then I'll have to explain my trade and my thoughts after. But if I'm trading micros, this gives me a chance to not have to concentrate so hard and kind of let the trade kind of work itself out. Because what I hope to do in having a YouTube channel is to give myself some accountability, force myself to articulate my trades, and then document so that later I can journal and create ultimately I want to create a place that helps people not just learn the mechanics of trading or how to pass an eval, but to help families, especially military. I'm a military wife myself, how to invest and trade your own money. And one of those ways is day trading. And that sounds very, very scary, but there are ways to day trade that are, they're simple but not easy. Okay, it takes a long time to learn this. But once you learn it, it truly is like riding a bike. Okay, so it looks like we're going to get our first fill. So I'm going to take my trade count size back down to 1 contract because I'm going to, this little guy here is a the point of control, which is where we have found in this current moment in time sort of the equilibrium. So I'm going to put my stop just above it. The likelihood is that we stay below for the time being. So until this line moves, I won't move my stop. If it comes up here and takes me out, then that just means I'm wrong right now. Okay, so now we're heading down here to this UB below us. Oh, it took me out. Fair enough. But I think it's still a good trade. So I'm going to, if it gives me an opportunity, add one back in. I like limit orders. I don't want to do a market order. There we go. Hopefully it comes down here and gives me an opportunity to put a stop in. And when I say a stop, it would be a hard stop for a take profit. Okay, so now it's going to go against me. So my first target would be just in front of this UB at 90. And I'll take this away if we just come straight down. But if we come back up in here, I'm going to do the same trade again. I'm going to add to it. Okay. All right, well, looks like we are going to go down. Once this breaks down here, I will put a take profit stop in with 2 ticks. Why 2 ticks? I'm actually making money at 2 ticks. In the ES, I would do it at 1 tick because you make money with 1 contract in the ES. Most brokers charge the amount per contract is right at or above $1.25, which is what the value of 1 tick is. So I would like 2 ticks if I'm trading the micros. I would like 1 tick if I'm trading the minis. So yeah, so I'm looking to create a series of training sessions, like 1 hour how to create a budget, how to assess your financial well-being, analyzing where you are financially, and what is your first step. Is your first step paying off debt while you learn how to trade with an eval like this? So you spend a little bit of money, maybe $200 a month you set aside to learn how to trade. And then, okay, so we're coming back up here again. We're in the middle of this node. See, this is a high buyer delta here. So now we're above it. Oh, I was going to say I'll add to it up here, but we've come back down. So back to plan A. So this is just the 1 or the 3 tick waltz that ES likes to do. Some people call this chop. It's not really chop, it's just ebb and flow. And obviously, if you can do this with 1 micro, you can do it with 1 mini. You can do it with 10 minis. It's all about the size of your account. So when we're learning, it's always nice to make a little money. What if in 30 to 60 days, let's call it 90 days. Let's say it takes you 3 months to learn how to be profitable and pay for your own training. In 3 months, you've spent $200 a month learning how to do this. And at the end of 3 months, you can make comfortable making $200 a month net profit. Well, then you're starting to learn for free. And from there, you just have to experience the market's vicissitudes. That's Charlie Munger. So first you have to survive, right? You've got that learning curve of, you're unaware of what you don't know. Then you start that first 90 days, you become aware of what you don't know. So you are successful at knowing you don't know anything. and you start to gain a little bit of competence, and then you become consciously competent. This is from a Stephen Covey classic, The 7 Habits of Highly Effective People. So once you've gotten to a point where you're consciously competent, in other words, you know some things and you're able to execute them with effort and frontal lobe, like consciously, like you're trying and you have to remember and you have to keep your notes. You do that for a period of time, and it's different for everybody. It could be, 6 months for some people, and it could be 6 years for others. So during that learning period, you want to set yourself up so that you don't empty your bank account, right? So if you have 2 hours a week to learn this stuff, then it might take you a year to become consciously competent. By then, maybe you can free up some of your time and accelerate your learning and become unconsciously competent, which is where, if you've ever watched the movie The Matrix, there's a classic line where Cypher is talking to Neo and he's looking at the Matrix in code. And he says to Neo, I don't even see the code anymore. I just see blonde, brunette, redhead. And it's true. After, my master's degree was in IT, project management. And when you start writing code, it all is just it's a lot of curly brackets and parentheses, and you have to look and pay attention and think hard about things. But once you start writing the code and you see it over and over and over, okay, so now we have a price rejector at the same level that we had UB. So this is important. Is it going to stop here and go back up? That's why I have my protective stop in here. The energy feels like it's going to push down from here. And now it's kind of hanging out. If we push down, then I can drag my stop down to here. Now it's going to take me out. But you can see the dance. 1, 2, 3. Okay, so no trade right now. We got to see what happens because we're below this node here where it likes to be. It didn't break this area. It came down and visited it. And it looks like it might break. I won't go short again here unless it breaks this and leaves more UV. And then it has to give me a little bounce so that I have a reason to get back in. Otherwise, this might be a long, but I won't take it long until we get back over this node and it looks like it's going to go up, and then my target will be up here. This guy over here is telling me the number of block trades. And really the only information I need to see is that last column. And it's a lot of buying, not a lot of red. Okay, so we came down, but we made a price rejector. So still no trade, at least not to the downside. If anything, I could take a cheeky long, but I'm not going to because that would be a very low probability trade, especially for overnight. Because you see this thin area right here? Either we're going to break through and come down quickly, relatively speaking, or this is going to act as an area of what others would call resistance. And remember, our point of control is up here. See, it's shifted down, but it's still up here. So that just tells me that buyers and sellers are more comfortable in this price range right now. Okay, so this is less of a great price rejector. We're increasing. So we want to see, okay, now we've left. If it'll pull up just a little, I can get short. No, I don't want to join it just yet. There we go. And I'm okay if it doesn't come up and get me. I don't want a market order because that gets me a bad position. Okay, no. Now a price rejector. Not the greatest, but it is. We're adding to it, so it does look like it wants to push down. These two little guys over here are my 15-second, 15-second bars. And this gives me even a more granular look. So this is the ES and this is the NQ. Okay, so give me a little bounce here. I'd like it to come up here and fill me right here so that we have 2 or 3 ticks room to get back down here. I always want to leave myself enough room that if my target is, if I'm correct, I can put a 2-tick stop in when this breaks. So now if we keep going down below this, it'll give me enough room to put a stop, a take profit stop of 2 ticks. So let's see. Right now the ES or the MES is pushing up. Sorry, the NQ is pushing up. So that's kind of working against me. And there's a little volume there. So I have these equivolume bars. So when there's a lot of volume, it'll be a fatter bar. If there's less volume, it'll be a skinnier bar. So like this move was pretty strong to the upside, and these moves down were pretty weak, thinner market. It means just more people wanted to buy than people wanting to sell, and that's why we have now basically a P-shape chart from Friday to overnight action, which is very bullish, by the way, for today. A lot of things look bullish because we've left UB up here just over 6,000. We're going down right now, but not with any real momentum. And now you can see both the ES and the NQ are pushing up. So this UB is less attractive. And I wouldn't add to this one until we get to the bottom of this node up here. And that would be right about here, 91.50 or so. Yeah, so my idea with teaching how to, not just how to trade, but how to manage your money and how to create wealth, which is what we all need to be doing. This market, this economy is, ripe for devastation. So the less exposure to the markets you have, the better. And so that's why I like day trading. I can be in and out and make a higher return on my money in a shorter period of time with the least amount of risk. And everything else is in treasury bills. Okay, so I'm watching the ES, not necessarily the MES, for my trade decisions. Okay, so now we put in a price rejector. So this, okay, let me take this away real quick. I think, because we put in another UB, there we go. Now we can see if we move through this quickly down to, well, we could go all the way down to 82. We still have UB, so I'm still thinking down. NQ has given me some confirmation there. I'm going to just drag this down as we go. So now we have a price rejector. So I'm going to drag it even closer. So I'm going to try to keep, I imagine I have 100 contracts of of ES, what would I do? Well, I would not let this go away, right? If I had 100 contracts of ES, or let's just even say I had 10. If I'm trading 10 contracts of ES, it would be 1250 times 10. That would be $125 per tick. And I have 11 ticks now. Our point of control is below us. We have UB. All right, so we got taken out with 8 ticks. So if we had 10 contracts and 8 ticks, we just made $1,000, right? So we're practicing with tiny amounts so that in the future, when we're really good at this, whether that's a year, 2 years, 5 years from now, we can trade with 10 contracts ES and make $1,000 in, I don't know, how long was that? Oops. We've been on here for 41 minutes. So not bad for, there's probably another trade to be had here, but let's see. We are in Apex, so let's just go over and trade with the, oh no, we don't even have to jump that high. Let's just do it. Let's just double, right? So we're going to stay very conservative. So we're going to put another 2 contracts on here, so long as there's UB, and it'll come up and fill me a limit order. Okay. Now we're going to look for it to come back down here and hopefully keep putting in more UB all the way down to here. See, we had this little push up and we've rolled over. I like to watch the MQ because it does drag the ES with it. And I'm just looking to get 2 ticks where I can stick a protective stop in. Okay, so now we got to make a quick decision here because it's a price rejector. And I would, again, if I had 10 contracts, well, that's okay. Okay, so we had 2 single prints fill in here. So let's see if it'll come up here and revisit these single prints. It wasn't a 0 print because that would be a higher probability, but it did leave UB. I'm not chasing this. It has to pull back 3 or 4 ticks here before I want to get short. Okay, so I missed that one. No big deal. Then we're almost down to our original target. But we have a price rejector. And again, if we were trading large size, let's do this math again. If we had 10 contracts on in the ES, that's $1,250 per tick times 34 ticks. Our morning take home would be $42,000. I think we would just stop for the day. Okay, now we have UB again. So give me a pullback up here. I need probably right about here. Okay, good job. Now, it could just completely leave UB in this bar. There's nothing magic about UB, but as long as we're 2 or 3 ticks away from it, chances are we're going to come down here and clean this up. If it comes way up here, if I had 10 contracts on, I would just cut my losses. But I never go in with my full 10 contracts. I start with 1 or 2. So here we go. Our point of control is below us. I would like to see it come down here, clean up this UB so I can put a stop in right here. You can set up these trades to automatically put buy and sells, but I've tried that bazillions of times. It never really works. there are certain conditions where you might want to do that, or if you're writing algorithms. Okay, so now it's pushed down. I'm going to put my stop in. It gave me a price rejector, so there you go. I got 2 more ticks. But again, if I had my full contracts in there, now we're at 38. That's $47,000. And we had, you can also track your, let's see, we want to do, it's from Sunday. Maybe I have to go from 3. Let's go back to Friday. That should be giving me, oh, we want 37. Okay. Maybe not Friday. I don't want to catch Friday's trades. Okay, so this gives us the, okay. Okay, so these are the trades that we've had just this morning. And this gives us our total without commissions. I track the commissions. They're different for every account I use, so I don't track them in Sierra Chart. I track them in Rhythmic for the evals, and then I just have a spreadsheet that I track them in my cash account. But you can roughly say if you had 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9 trades at $1.50 per contract. 9 times $1.50. So $13.50 off of $47. Means we've made roughly $33. Again, if that were minis, that would be $370, $350. And if you had 10 minis, that would be times 10, right? 37,000. So add a 0. You also want to keep an idea of what your total MAE was, your maximum, what it went against you, your flat to flat. So how far offsides was I at any given time? I was as much as $30 offside. So that's an important metric when you're first learning, is how to keep your loss exposure tight. Now I had 100% win rate, right? I had no losses, but at one point I had at least one contract offsides by more than what I would like. I want these to be 0 or as close to 0 as possible. That's not possible in the NQ. We trade the NQ completely different, but ES is a better instrument to learn to trade on. Once you've learned it, you can go get yourself beat up in the NQ. The NQ is where you're going to make the most money the fastest, but it's also, I think, a widow maker. So I've been trading now, day trading and doing the evals and successfully getting funded and taking profits out for solidly for the last 3 years. And before that, getting funded, but not making it to pay out, or losing money in my cash account, making some back, kind of break even. For about 7 years I've been doing this. Okay, so now we're back down here at the lows, but we have a price rejector. So for now, I'm just going to quit because this was actually a good morning. It looks like we're going to keep going up. There we go. There's one more trade. One more time. Okay, so we need a dance. 1, 2, 3. We need to come up. It's probably asking for too much. Let's see if we can get on right there. Okay, now we still have UB, but now we're getting a little bit, we're asking for a bit much. You can look at it a couple ways here. Chances of us, since we've come this far, of coming all the way down here are very good. But we've done it so slow. And even the NQ has spiked down here and said, no, I want to go back up. This short term, this is a 15 period LRC, and this is an 80 period LRC. So, oh, look, now we're really going up. Okay, so what time is it? 8:21. Let's see. So we came down here. We've left UB, but we've moved away pretty quick. So now we're at the top of this fatter area. We moved through the skinny area like we said we would. So this could act as an area where we come back. So I'm going to say I would add up around here, and then I would add again up here. Just kind of marking my area. And what I might do, if I'm lucky enough to get all the way back down here, I'm going to say, I know I put 2 on at the same time here. I'll take 1 off with 2 or 3 ticks of profit so that I can lessen my exposure. This is just thinking in bets. What's the likelihood of us coming down? Meh, it's possible, but now we've moved so far away that this UB is almost meaningless. I'm cognizant of I'm currently giving back. So I could just take this trade off and still, like I said, if I had $35,000 in profit, I probably would not be trading it like this. I would have taken it off right away under here, accepted a little bit of a loss, and not let it go this far against me. But this is not a bad trade idea in the micros, right? It's a good learning environment. And if I had $1 million that I was trading, maybe I would let it go against me. $1,600. That's probably not too much of a loss exposure. Because the market's behavior right now isn't showing me that it's going to wildly run against me and keep going. But it may not come back down here at all. What I may end up doing is adding to this only to just be able to get out with a few ticks of profit. Turn this loss into a positive. But you have to be patient for that. You have to let it go further against you. It has to stretch, which it is, right? So we're stretching. The longer period LRC is still down while the shorter period is up. So it's coming to this convergence area where it should turn itself around, at least short term. All right, so what I'm going to do is try to take 3 off if it'll pull back here. It doesn't feel like it's going to pull back just yet. Oops, I don't want that. I want limit. Be very careful. So now we're still trying to keep, we're far away from our 3-tick dance, right? So, but we're still under the point of control. And this candle is a down candle overall, excuse me. But our node, which is almost like a little magnet, is up here. So we have to be willing to be able to let it come all the way up here. And I will add to it. As a matter of fact, I have 4. I'm going to actually add 6 to it up here. Adding 4 would only split the baby, right? So if I did 4 up here, I'm going to raise my average price to here. That's still going to be too far for me to expect the waltz to come back and pick me up. And at that point, I'm in my maximum amount of what I want to expose. If I'm going to be more than 10 contracts MES, I might as well be trading the ES. Because the cost of this trade is now at 10 contracts would be 10 times $1.50. So I'm cognizant of what it costs me, just not just in loss of ticks, but in real dollars. Once I put a contract on it, automatically costs me $1.50 per contract. Okay, so now you see we have now expanded this range quite a bit in the NQ, but it is rolling over just a bit, but it's just come down to its 15-second LRC. Chances are it's going to bounce up from here. Same in the ES, and there it goes. We want to see these LRCs flatten out and roll over. You see all the blue over here? All that buying just pushed us up. Now I have another chart on another computer that you can't see that I have 1 minute. Oh, actually, that's not a 1 minute. That's a 15. I have 1 minute candles. And I have sort of a squeeze momentum indicator, which is firing long right now in the NQ. So I definitely want to be careful. We could just be moving, we could be heading back up. That was it for the down move for right now. And so now I've let my profit turn into a loss. And this is where many traders get greedy and they want to keep adding and adding and adding. So I have to be aware, first of all, that that is what I'm doing. And I'm not just making excuses, trying to hope. Hope is not a setup. But I'm still thinking in bets, and I'm also going, okay, well, if I took my loss here, my loss would not be that great, $20. And I'd have to go flog myself. And the temptation here is, okay, it didn't reach up here, so I want to add here so I can get out of it sooner. Don't do it. Just sit in this for a minute. It might come all the way back down here and take me out and go all the way down here. It's the nature of trading. So we're back below this high volume node of 90, which happens to also be the point of control. We're creating a new little node here. There we go. So now our LRCs have kind of flattened out. Let's see if we can push back down. The 80 period LRC down here, 59.85. If it comes back to revisit this area, which would just be, ebbing and flowing in a range, 85 is down here, which would fill me in profit. So I'm still well within reasonable expectations. Now, what I could do, if I feel like, let's say there's news, we're right ahead of the half hour mark. There's always a little jiggle around each half hour. So we might get a quick little push down when the clock rolls over and we get a new candle, or we could get a quick push up. So we're kind of right in the middle. This is the ambush zone. So either way is okay. If we get a quick push up and pull back into the range, that'll add some contracts and I can probably come off pretty quick. If we get a quick push down, we may just be able to get out and keep our original profit and maybe leave one contract on. Okay, let's see what the wiggle is. The wiggle is down, but only by a point. Okay, there's a little UB, a little more UB, a little more UB, and I don't want to be a dick for a tick, so if I can't get filled real quick, I will. There we go. Okay, so now I'm going to put my stop take profit there. Don't need this guy anymore. Okay, so I'm not going right up against this because the price action, the current price is right there, but I'm going to be just above this little node. And now that it's moved down, I can sit it on that line. We're going to look at this node down here. Oh, but we got price rejector. It's not a great price rejector. I'm going to say if I can get out right here, I'm going to just take it. There we go. Nice. Now, this is a stop, and so it is at market. So if it touches this, it's not going to give me the best. There we go. So we ended up 54, which is, let's see what that total, so $52 or $53 minus however many trades I took. So it's $1.50 per contract. Whoops. Right. So let's go. All right. So now you can see my MAE on that last trade, and I had two that actually were losers. So would have been smarter for me to take my 30-some bucks and walk away, but there was reason for me to stay in. I had to take some heat, but I ended up in profit. And that, with that, it is 8:30 a.m. I honestly didn't check with the news or anything, and I thank God there was no big news at 8:30. Ugh. Anyway, it's time for me to get a little more coffee and get dressed because I'm not even, this is the beauty of trading in my pajamas. So success, yay, a little bit of heat, boo, but that's my first share. I've really been talking for a whole hour. That's unbelievable. All right, well, cool. Hope that helped, and see you next time.